What's going on out there, good people? It is your boy Look Around with LMD Trading, and we are back. We are back with another video looking at long-term investing. Made a video at the beginning of July, beginning of this month, just discussing whether or not the time is right to be long-term investing and showing what I use for my long-term investing, which is M1 Finance. Found out about M1 Finance back in March and did a little research on it. Looked to be a good platform, a good company to be using to invest in. So opened up an account, and within M1 Finance, they use what they call pies. You create a pie, and then you create slices within that pie. So created a pie, put some slices in there. With M1 Finance, you can pick how much money you want to deposit into the account at any given time frame. And then based on what that deposit is, M1 Finance will go out and purchase stocks, ETFs, whatever you have in your pie, based on the percentage of that slice. So I created a pie called long term, picked some stocks, have one ETF in there, and we've just been letting it do what it do over the last, we did this March 28th. So over the last, what's that, 3-4 months or something like that. But we'll go ahead, let's go ahead, bring up M1 Finance. Again, I have no problem showing what I'm doing with that account. So with this long-term account, once a week, it takes $100 from my bank account. And in the morning, it buys, scroll down. This is what's in my long-term pie. Got Tesla, Amazon, Home Depot, Apple, the SPY, that's the ETF, ABBV, AMD, Disney, and Intel. These are companies that I use, I'm familiar with, and I don't see going anywhere over the next 50 to 100 years. If you remember, or if you watched that previous long-term video I did, which I'm gonna bring it up real quick just so we can see. If you see right now, we are actually green on this account. When I did that video earlier this month, it was red, and it was red pretty big. So I'm gonna go ahead, I'm gonna pull up that video. Let me go back, M1 Finance. I like being able to just hit them chapters, that's nice. We'll come right here and let's see what that account was back then. So balance on that account was $1,554. It was down $245. So it was down 20%. Market gains was 247. Earned dividends was $1.94. So that's where we were at the beginning of July. I posted this video July 3rd. Those numbers was current as of that date. So we'll go back to today. Today is July 31st. We're about to close out the month. But we see now the account balance is $2,224. Again, I am putting $100 a week into that account, but we are up $26, basically 2%. Market gain gonna be the 22 bucks. But look at the dividends earned. It's up to $4.64 now. It is one stock that's down here. I don't really know much about ABBV, but the reason that it's in there was because the gentleman who was talking about it was talking about the dividends that it pays. So let's look. These 5 are what have been paying dividends so far since March 28th. Look at what ABBV has paid in dividends. Basically triple what these known companies have been paying. So that's the reason why I have ABBV in this account. And you see it's down $14 right now. But I still will make money on the dividends. And I want to say that I only own like maybe 1.5 shares. Yep, right at I own 1.5 shares right now. So every week, M1 goes out and it purchases. Let's see, what do we have this one weighted at? 15%. So the 15% of my account gets allocated to buying ABBV. And it'll just continue to do that over the next 5 or 10 years. Again, this number here, I'm not concerned with. Look at what this is my account. Look how it just up, down, pull back, ebbs and flows. That's what the market does. That's what the market does. So I'm not concerned over the short term. But the reason I am making this video today is I am about to create a new pie. I'm about to create a new pie, and I figured I would show you how to create that new pie. My setup is going to be a little different because I already have an account that's funded, that's working. But you'll go through somewhat the same process. You're going to want to set up a bank connection. I already have that done. And then from that point on, everything should somewhat be similar. So what I like to do is go to research. And this is something that you should probably do as well. You come here, you'll see what pies you have. But I like to go to expert pies. And what expert pies are pies that their experts at M1 Finance has created. And it just lets you see, let's do this plans for retirement. So this one here, it says invest for your target retirement date in a portfolio that adjusts to your goals as you age. So every 5 years, they have a aggressive, conservative, and moderate. So let's say I'm going to be retiring in 2025, and I want to go aggressive. Let's just click that one. So the performance, past 5 years, it's up 39%. Past 3 years, it's up 21%. This one here, of course, it's aggressive, so it's going to be a high risk tolerance. And then these are the slices within that pie. So pretty much all Vanguard products. And what I like to do is just go through these and look and see what they are. So in this particular pie that I'm going to be building today, which I'll be labeling this one my grand. It's going to be a pie that I'm building for my grandkids. I have 2 grandkids. VOO, that is going to be one of the slices within that pie. I'm going to try to make this one a little well-rounded. I'm going to go with the real estate ETF. So I'll probably do VNQ. Let's see if the other one is in there. I somewhat had came through and picked out some previously. So those look like the only 2 that's in there. So we'll go back to expert pies. Let's see, income earners. We'll do income earners. Let's do domestic, and look at domestic dividends. It's up 65% over the last 5 years. Just think, had you been investing back then. So this one has 3 holdings in it. Has VIG, which is another Vanguard product. Guess what? I'm gonna put that one on my list. Let's see what it's done over the last 3 years. It's up 30% over the last 3 years. We know over the last year, everything is going to be down. Over the last quarter, it's going to be down. And no data for the last month. So that's a good dividend paying portfolio. If you just want to just straight use their portfolios, that's all you have to click. Let's go responsible investing. And we see here responsible investing. This one is up 60%. And this is what we're talking about right there. The market goes higher. It might pull back. If you bought in 17, it was down in 18. It was down in 19. But between there and there, it had went up. And then we had COVID, tanked it. And then look what it did afterwards. That's 100% right there. Over 100% growth in 2 years. But let's go down. We got NULG. This is just another ETF fund. And I think I'm going to go with this one. I'm going to go with the large cap. I'm not a real big fan of the small caps. Not a big fan, but look at the dividend yield on that thing too. 8.66. That's a nice. I was going to add ABBV back to this pie. Don't think I will. I'm debating if I want to add NULG as a large cap growth. I'll write it down and we'll see. But that's what you can do. You can go through, or if you have some stocks that some people have told you about, do your research on them. But let's look at this one. Other strategies. And this one in particular that I want to look at. Can you tell which one I want to look at? If not, bam, that one right there. Cannabis pie. Everybody has been on this big cannabis stock buying, almost like a lotto ticket type thing. Look at what the cannabis pie is down over the last 5 years. It's down 76%. See what it's down 3 years. Still 76. 1 year. 62%. As I was clicking those, did you see what domestic value was doing? Let's see. Domestic value, 32% over the last 3 years. 5 years, 47. Domestic growth, it's up 83% over that. So I'm curious, just take a peek. Let's see what's in that one. Again, you notice they use ETFs. Didn't see any stocks in these. That Schwab, that's an ETF as well. So those are like mutual funds. So if you see, they don't really mess with individual stocks when you're doing long-term investing. Let's look at this cannabis one. I want to see if I recognize. Look at these. Look, individual stocks. ACB, not familiar with. CGC, not familiar with. Cron, CRON, I have heard of that one. And Tilray, I see pop up all the time. TLRY. But out of all of these, that thing is down 75%. Let's see what Tilray is. 5 year. Down 84%. If you'd have bought, even if you'd have bought right there, you'd have paid $25 for it. What is it now? $3. This thing got up to $200 in 18. Think about the people that was buying. Let's not even go up that high. Let's say the people that was buying at $50. If they didn't get out when this thing spiked, or look at the people that bought way up here. That's just pain. I don't ever see this thing going back up that high again. But that's those lotto ticket buys. I used to be into those lotto ticket buys. I'm actually holding like 3 stocks right now that I bought back in 2021. Yeah, like around March 2021. Still holding them. Bag holding, as they say. But that's trying to get paid off of 1 or 2 stocks. I'll bag hold those just because they down 80%. I don't need to sell them now. I don't need that money. And they're small positions, very small positions. So Every once in a while, one of them will spike back up. I've had an opportunity to get out of one or two of them, and I didn't take that opportunity to get out even. But let's go into building this pie. So we are going to build a stock and fund pie. Stocks and ETF funds. Like I said, I'm going to call this one My Grands. Don't really need a description, self-explanatory. So we'll create that pie. My Grands. Add pie. So now we have the pie. Now let's add some slices to that pie. When you come here, you'll see that it's going to give you a list of different stocks, different ETFs, different products that you can choose from. It's going to pretty much give you some basic information on it, telling you what the dividend that it's paying, its performance, profit earnings ratio. But I just picked the ones that I want to do. So I'm going to just type them in. VIG. That's the dividend appreciation. I'm going to add that to the basket. And then you'll see this is going to continue to add them down here. Makes it easy. We had VOO. That's going to be just like the SPY. So we'll add that to the basket. And like I say, you'll just see them keep getting added at the bottom. We're going to do VNQ. I think that was the real estate. Yep. Real estate ETF. We'll add that to the basket. What else did we say? NULG. That was the large cap growth ETF. We see over the last 5 years, that thing is up 85%. Over the last 2 years, it's up 12%. So that 2 to 3 right in between there, it made a nice move. But we'll add that one. Again, we're looking for long term. And now I'm mixed. I don't know if I want to add Tesla or if I want to add ABBV. Let's do both of them. We'll add 2 stocks to this. Hate that I missed out on adding this one earlier in the month, making this pie, because Tesla's made a nice move. What did I do? Oh, I clicked the wrong button. I added it instead of just adding Tesla to the basket. So we'll add Tesla to the basket. And I am going to add ABBV just for that dividend payout, even though we do have a nice dividend. We see ABBV even over the last 2 years was up 48%. Over the last 50 or after the last 5 years, it's up 100%. So this thing does good. We're in a good pullback right now. So I'm going to add that to the basket, and then I'll come down here and click add, and we'll see that it has added it to the pie. So we have those 6 ideas. When you add to the pie, it will automatically allocate to fill up 100%. So everything is allocated. You can go in and play with these. So if you wanted that to be 15, it's going to come here and tell you need to add 2% somewhere else. So I'm going to keep these just like it is, though. Actually, nope. Let's see. We'll take this down to 10. So I got to put 6 somewhere else. I'm going to put 3 here to make that 20. And let's go here. Let's make that 20. So now we've allocated our 100% and we're good. So all done. We'll click continue. And see, one thing that I noticed on here, So we see that we got our long term, it's funded and it's in an account. Let's see. So that's our 6 slices there. And we're going to add this to the portfolio. So that's added. And this is what I've noticed. So see how this is, it's its own pie. I wanted these to be in its own pie. So I'm gonna have to go back and figure out how to do that. So they're in a block like this. But I'm gonna fund this account, I wanna say 25, either 25 to $50. I probably started out with $25. So everything up here had already been at 100%. So that was $100. So now what I have to do is kick this up to 25. And now you see I need to remove 25 from here. And that's why I said I need to make that its own pie. Because it would be easy just to change that to 75%. So I think I can take all of these and add them into another pie, which is what I'm going to have to do. But for now, I just need to remove 25% of that pie. And when you make your own, it'll be a whole lot cleaner because you will already have done that. I want to keep that one there. I want to keep that. What do we got to get rid of? 9. We have Tesla already in that other fund, so we can knock that one down. Got to get rid of 4 somewhere else. We'll get rid of that there, that there. And that's the thing. You can play with those numbers how you want to. But basically, let me, hold on. Let's continue. Save that. It's going to ask you if that's what you really want to do. Yes, it is. You could play with these numbers however you want to. You could play with them however you want to. And now I need to increase. So when you get ready to do your pie, or you made your pie, now you want to fund it, you'll just come to transfer. And then you just pick. You either want to do it one time, you want to do reoccurring. So we're going to do reoccurring. Going to go from my checking account to long-term portfolio. And we're going to go $125 weekly. I'm going to select Monday. Click continue. It's going to ask me if I want to confirm it. Yep, I do. And it's that easy. Oh, no, hold on. A schedule already exists for the selected accounts. Please edit your existing schedule. Let me see. Edit. Come on. Edit existing schedule. Because this is the first time I'm doing this. Edit recurring deposit schedule. See? Make it easy. Let's see, from the home screen. Exit out of there. So we go to home screen. Y'all see rules? Let's see, rules under recent transfers. Okay, there we go. Recent transfers. Let's close this out. I think it's blocking what I need to see. There we go. Transfer rules. Okay, there we go. See, we're putting $100. Let's edit it. And we want to increase it to 125. Save. Y'all learning right there with me. So we're good. We have edited. So now it's going to take 125 out each week. 25% of that money will go to the Grand's pie. And we're good. We're good. And I think that's it. I think that is it. Hope y'all found that somewhat educational, somewhat valuable. Again, short-term investing, day trading is not for everybody. Not for everybody. But everybody should be long-term investing. Everybody. People talk about investing, but they have 401ks. You're investing. 401k has you in the market. But not every job offers a 401k. M1 Finance can be your opportunity to get into the market. And by no means am I advertising for M1 Finance, because there are several other ways to do it. I know Webull now offers fractional purchasing of stocks. Webull also offers reoccurring deposits and purchases. Haven't looked into it just because I like the layout of M1 Finance. It makes it easy. You build that pie, you allocate those slices, you tell it how much you want to deposit each week, each month. You can do it bi-weekly. You can set it however you want it. Second Friday of every month, if that's going to be on your payday. And you just let it do what it do. A month ago, this account was down $245. Today, it's up $26. We're not concerned with that. What I want to see is 2 years, 5 years, 10 years. What are these things doing? And this is a good way for me to start a little fund for my grandkids. They're young. They're young. This thing can grow over the next 15, 20 years. And my son may have something set up for him, but why not I have something set up for him as well? So that's the thought on this. But I'm going to go ahead and wrap this one up. Hopefully y'all enjoyed it. If you do want to look at using M1 Finance, there is a link in the description. If you open up an account, I think they'll give you $10 right now. When I did mine back in March, they were giving you $50. $50. I'm not sure. They must have got a lot of people that got excited about it. There's also a link for Webull, also a link for TraderView. If you do any day trading, definitely think about using TraderView if you're not already using it, so that you can track your trades on a daily basis. As I do my recaps every day, you see I always go back into TraderView. TraderView can give you some good information. But on that note, we're going to go ahead and wrap this one up, and we will be back at it tomorrow. Peace.